And hi, everybody. Back. Looks like we're almost live. You are now live. Hi, everybody. Greg D'Amico here with the Accelerators Organization Mentor Session. And back to for another month of questions and some experience sharing, I guess is what we like to call it in my organization, EO, Entrepreneurs Organization. So a little bit of history for new people to give them some context of where I'm coming from when I'm answering questions is that I was a I started my world in insurance, financial planning, evolved into money management, and actually started a mutual fund that had some really nice success with. Rode a wave up in the late 90s and rode it back down again in the early 2000s when the markets got trashed from a lot of activity or a lot of chaos that happened, 9/11 being one, Enron and WorldCom scandals and other things. As time went on, I ended up selling off that firm, and I saw the future being connectivity through software because a lot of the investing we were doing in the investment firm, IPS funds, was around connectivity and a more connected civilization. And we invest in those companies that when you connect civilization at a higher level, you create a lot of increase in living standards, a lot of productivity increases, a lot of wealth creation. So I saw the future being connectivity through software, and so I went to India in 2004. I set up an office there, and with a partner we started a software company that I still run today called Efficience. We do mobile app development, e-commerce development, and also a lot of database integration and dashboarding, as it's called, where we pull data out of dashboards or out of databases to put into a dashboard, color code it, and we look at your metrics, your key performance indicators, and so forth. So a lot of that type of work I do is custom. So I build something for a business that wants their own mobile app, or they wants their own key e-commerce application, or they want to customize a Shopify or a Magento type of situation. So anyway, that's been my business history. I've got a lot of other things in between there, and started a few different applications in the software space, but I will get into answering the questions now. First one is from Kristen. Kristen asks, how do I ask a client for a deposit on a bulk order? Business description and background of question. I'm a startup golf apparel wholesaler with limited cash flow. I am selling clothing to golf courses and pro shops. I also work a second job as a COO for my dad's golf business, where we buy from vendors for 10 golf courses, pro shops. The vendors only collect from my dad's business 30 to 90 days after shipment. No deposits needed. Being that I'm a startup, I need a deposit in order to place an order with my manufacturer. How can I get new buyers to trust me to make a deposit on a bulk order of my clothing? I have a sales report from my first year in business and can show that I am in my dad's 10 shops, if that makes sense. Okay, Kristen, hi, how are you doing? And good to hear from you. So the option here is to get access to cash wherever you can, okay? And to build up your business, you have to, it's a lot of times building the trust. You're asking, well, how do I get trust with them? Well, it's just building that relationship, and it may take you doing some, fronting some cash to get started. And so how do you do that? Well, you look at opportunities with credit cards, with loans, with family and friends, and so forth to get you going. Okay, once you get in there, get going, build up that reputation, show you're selling, show you're paying, everything else, then you'll build that trust. So really it's, you say, how do I build trust? Well, it's basically an experience aspect that the more experience they have with you, the more you do what you say you're going to do, and you do it when you say you're going to do it, then you are going to build that trust with people. So what happens here if in this situation, I guess there's an opportunity that to get them to do business with you without cash up front there could be a possibility that you offer them a discount. Say, well, if you pay me now, I'll give you such and such percentage off of the deal. Enough that would be enticing for them, not too much that is going to crush your profit. Hopefully you make a little bit of money, but you got to expect that to get started in business, you're not gonna make big money in the beginning. You got to build those relationships, build that trust, and move forward. So I would look at that as a potential option for you, is to build the relationships with the potential, if you can't get any access to money so that you can do this and then build that history and experience with them, then I would look at going out and trying to offer them some type of discount. You got to crunch those numbers carefully to make sure that you can get what you can get away with and not do less than that. But look at how the numbers unfold so that you could say to them, you can start with a higher number. Hey, what if I give you a 10% discount to pay now, and so forth, or give you a 20% discount, or give you a 25% discount. Start with a number and then see where they are, where that trigger point is for them, and it may be a common trigger point among your other different places. They all may be like, say at 20, you give them 20% off, and they'll pay up front. Okay, so then once you build those relationships, you have that, then you go back to that time frame where they trust you and they just pay you over time, but not at the discounts, and you increase your profit margins as you go. So those are my thoughts on that, Kristen. Hope that helps. Next question, Rohit asks, should I increase product prices for my storefront? Business description and background question. We are getting a storefront around December. In order to pay rent and utilities, does it make sense to increase prices or just leave them where they are? Product ranges from 50 cents to $15 plus. Okay, Rohit, so it's really hard to answer that question. Okay, you've given me, there's not enough context here to give you some meat that could be helpful for your situation. So the only thing I can really say around this is that, we're in an inflationary environment, okay? Everybody knows this, and people are going to be more forgiving that you're increasing prices. But when you say, do I increase prices? Well, you got to analyze that from the metrics of your business and see what it looks like if you raise prices, what it looks like from your standpoint of the cost of your expenses, your cost of goods sold, and down to your profit margins, to see how those will affect you. And also you got to look at the competitive environment. So you're coming at this in two different angles. Yes, usually an increase in prices is a big way. You can increase prices a few percent at times, and you can get a 5 to 10% increase in profits. Okay, so there's calculators out there that can help with this, but I've seen the numbers, and it's called like the 1% rule. What's a 1% change in your prices? What's it do? 1% increase in your prices do your profit margins. What's a 1% decrease in your prices do your profit margins? And a lot of times it can be pretty dramatic. I've seen 1% be 10 or 15% to the bottom line. So, but 2%, 3%, 5%, what does that look like for you to be able to get that benefit, and also know that you're staying in line with the marketplace? Okay, so if you raise your prices and nobody else does, then what's going to happen? You're driving down the street and you see gas for $5 a gallon, and you go down a little bit further and you see gas at $4.75 or $4.50. Where are you going to get your gas? Well, the marketplace is out there in a very visual competitive world, that when you try to raise your prices and the rest of the market is not going to react, you're going to lose out on a lot of business. Okay, so given what you've told me, that's all I can do for you right now. But if you give me more context, Rohit, I would be happy to dig in a little bit further with you on that. Nadia asks, if someone wanted to invest in me to open up a salon suites business, how much percentage would I have to give them? Business description and background of question. I am currently in a salon suite as a hairstylist, looking to expand my own salon suites. Okay, Nadia, actually a lot more is needed here too, okay? You guys, when you're putting these questions together, if you could give us more, you can give the mentors more data, you're going to get better answers, okay? So I've got to be very kind of top level here, just because there's not a lot of meat that you've given me. First of all, when you say salon suites, I'm assuming that is that you want to set up a place where there's a bunch of separate little salons that those hairdressers come in and they rent that particular suite from the owner of the business. That's what I'm assuming by what you're saying, because you're saying a salon suites. So, I mean, you open up a business with a bunch of salons, stations in them that these people will come in and rent from you, and then it's up to them to determine getting their own business. They'll pay you a monthly rent, whether it's $300, $500 a month, and then they would have to build their clientele to make sure that they're making money after they pay that rent. So I'm assuming that's what you're saying. But usually, to give you some generalities here, it's usually an investor that when you match up a person with an idea or a product or something and they bring in the people with the capital people have more leverage, okay? Because you're not going to get anywhere without the capital. So in this scenario here, the capital is going to probably demand 50% of your business, maybe more. I would try not to go more than 50%, and I would try to minimize that a little bit too, but that's all real about negotiation. If somebody has money, they're going to come and they're going to want to have as much control and leverage as possible with their money to make sure they get a return on it. So, but there are people out there that are generous and not looking for as much of a payback as they are helping a startup entrepreneur, and they may give you money for a smaller percentage of that. But it really depends on the circumstances. I would try to negotiate a smaller percentage so that you have a lot more to make money with. But if this your plan, long-term plan, is to open up a bunch of these to get one started at the higher, like maybe a higher percentage ownership, the next may fall in line with your abilities to finance, pay for, out of cash flow or something, the future shops that you may want to create. Okay? I hope that helps, Nadia. Stella asks, what tips can you share on making afternoon work more productive? Business description and background question. I own a small sportswear brand in Croatia, and I work as a personal trainer. Afternoons always seem to slip away without much work getting done. By implementing which habits can I improve? Okay, Stella, so let's see. Well, it's pretty common that a lot of people have a lull in the afternoon, okay? Most of us are good at when we wake up, we have the most energy, and we're ready to get things done. There's that other side of the world, smaller percentage, I think, that people are more energized in the evening and they get more work done then. But for most of us, being in the morning is good. We have that morning energy burst and we're good to go. We get a lot of things done, more productive, and then the afternoon comes. So a couple of my thoughts and from experience and so forth. And you're a personal trainer, so you kind of probably know some of this. But number one thing I would be looking at is getting plenty of sleep. Okay, sleep is people are they write it off, saying that the common theme out there, the common line is I'll sleep when I'm dead. But the thing is, sleep is probably the number one thing that is a betterment for our lives when we get productive, good sleep. So measuring your sleep, making sure you're getting good sleep, making sure that you have enough magnesium in your body magnesium is a huge aspect of an overall builder, and it causes a catalyst of so many other things to happen within your body. If you're depleted of magnesium, it's going to affect your relaxation, it's going to affect your sleep, it's going to affect a lot of things. So making sure you're getting good magnesium and you're getting good sleep. And that's going to allow you to have more energy in the afternoon to feel like you want to accomplish things. Okay, so that's one. The other one is, what are you eating at lunchtime? And I'm sure you're probably eating pretty healthy, but for others listening, that I found in my early part of my career, I'd go out to lunch with clients and other people, or just have lunch. I had to have a hamburger. I had to have something of substance. I couldn't understand how these people could just eat a bunch of lettuce and feel good or feel filled up. Well, that's what I eat now, is salads a lot, and other things, but I do not get full. I do not eat a lot at lunchtime because it will seriously dampen my performance. When I would eat a lot, I go back to my desk and I want to put my head down because I just that digestive process of that was too significant to keep you awake and not feel like you want to do anything. So the other thing I do is I put things on my calendar, okay? Even stuff that I want to accomplish that nobody else is involved, that I don't have to align a calendar with somebody else. I will put it on the calendar. And I say from 3 to 4, I'm going to work on this strategy session for launching this product, okay? From 4 to 5, I'm going to make calls to a certain group of people to inquire about some type of knowledge that I want. And with that, once it's in the calendar, things get done. Okay, it gets done when you get aligned with people. It gets done if you put it on the calendar for yourself and you just motivate yourself to know that what's on the calendar you're going to do. So, and some actually, there's a lot of societies out there that's commonplace for them to take a nap in the afternoon or around lunchtime. So, I mean, if you're feeling that's an energy thing, then maybe having the time to squeeze in a nap, or if you don't have the time, to make sure you're getting a good 8 hours sleep a night. People go on 6 hours, 5.5 hours, 6.5, 7. I feel that 8 is best. I can't always get that myself, but that's what I'm trying to shoot for. And I do a lot to work on my sleep because it gets harder to sleep as you start being more mature in life. That's all I have for you there, Estella. Hopefully that'll help. But I don't have a lot of other thoughts as far as what you can do to be productive. There's books out there. What's his name? Allen, I think it's David Allen, wrote a book called Getting Things Done. And he's got a lot of productive tips in there about checklists and other things that he uses for maximizing time and efficiency and productivity. So consider that. The book's Getting Things Done. His last name's Allen. I think it's David Allen, but I'm not sure. It's a book I read a long time ago and found it very, very beneficial. Okay, so Rohit asked the question, in today's environment, how and what resources would you utilize to prepare a business plan with projections if you have not done it before? Business description and background of question. I sell exotic snacks and drinks from around the world. I am applying for a loan or a line of credit for our brick and mortar store and preparing my business plan. My first year sales were very low. You got 13-61, so I'm assuming you're talking about 1,361, not somewhere between 13 and 61 sales and an average of $32 an order. But we were only e-commerce. I do not know how to prepare a forecast of future sales as I do not have the experience. What can I do? Thanks. Okay, Rohit. Well, this is a little bit out of my wheelhouse, but from the aspect of planning and projections, I've got a lot of experience there. So first of all, I would go to Google. Google's your best friend here. Go to Google and Google how to prepare projections for a business. And then what I would do is I would create projections within certain ranges. Like if you do low sales, medium sales, and high sales. And with that, I would look at each one and I would create a description. Low sales environment is that you would explain what that would mean. Economy is bad, inflation's high, interest rates are high, and the market is soft in your respective area. And talk about that. And then in the medium section, I would talk about what those parameters are with working within a middle of the range. When I say medium, like the middle of the range type of that you could do, and then discuss that business is respectable. It's interest rates have moderated a little bit, inflation's down, and so forth. But give parameters around what you see in your respective field and industry that's going to talk about it. What causes things to be good? What causes things to be bad? Do you have supply type situations? And so when you look at the ranges, you can put these in and so forth. And then I would just look at what other people are doing. So it's important that when you're creating your calculations that you're making sure you're getting a profit. Okay, so you want to go and do those calculations and a low, medium, high, and make sure that you're coming out with a profit when you analyze in the respective situations. Now, it may not be in a low sales environment, bad economy. You may see that you have negative profit margins, but you have to look at the areas that you can adjust in your spreadsheets. Like, what are your costs of goods sold? What are your variable expenses? What can be taken out and that you can still make money on? If you have high fixed expenses and you're not making sales, then you're going to reduce down it's going to cost you money. You're going to be putting money out instead of bringing money in. So I would definitely setting up a line of credit to make this happen is appropriate because of the unknowns that you may have here. Hopefully you can put capital into this to cover the getting the storefront up and so forth. But I would look at it from multiple ways on this range, and I would look at it from the aspect of your profit margin, okay, and making sure that they come out. When you Google this, you're going to find a variety of things out there that you can start looking at, but look at it from your perspective. Maybe Google it in the form of projections, like business projections for your industry, blank being the industry. What is your industry and what are you going to talk to them about and so forth. Okay, so give that a try and look forward to more questions in the future. So Eric asked, do I need and what are pros and cons of having both personal and or business credit as a business owner, and how should I use credit for my benefit? Business description and background question. I haven't owned a credit card since 1998. I have bootstrapped my business from the beginning. If I need to buy a vehicle, equipment, materials, coaching, or invest in a new team member, I need to make sales and save. If I don't have the money, then I can't afford it. It is the mentality I was raised with. At what point is the entrepreneurial journey is credit recommended to grow a business, and how does one utilize credit for growth? We are currently at $400K a year, and what perks could I benefit from using credit cards or lines of credit? The business is Rat Exclusion Service. We're in the business of giving people their homes back from the invasion of rats. Okay, Eric. I have available credit, but I don't use it. I like that idea of what you're talking about, but a lot of times in business, that's just not possible. It's not possible to not have access to money because things happen, because you have a lull in sales, because you have to make payroll, and you have a lull in sales, you got to pay your people or they're going to leave you. So by running your business as conservatively, it's like that is a big accomplishment. And I commend you for that, but it's probably slowing you down a little bit in your growth opportunities. So you said, what is credit on the way to on your entrepreneurial journey? It's probably holding you back, but it's not like you have to have debt all the time. You want to have lines of credit or access to credit cards so that you can get money at certain times when you need it. So there's a misconception about business in the sense that if you are growing like crazy, why do you need any money? Well, what a lot of people don't understand is that growth costs money, and you could grow yourself out of business if you don't have access to capital that can fund the business as you go. So when I learned that a long time ago, I was like pretty shocked by that. What do you mean? You're just bringing in money, you're making money, you can reinvest that money and you just keep growing, right? No, that's not the way it works. If it's growing so fast, you need capital to keep up with that and so on. So in this way, you could be a bigger business than you are right now if you use credit to help yourself grow and leverage you a little bit. It's not saying that you want to have a lot of money outstanding all the time, but lines of credit and all the entrepreneurs that I've been around, it's like lines of credit are necessary because things are unexpected. So putting them in place, using that money to invest in the right things, but trying to keep that mentality that you have, that you just want to do this temporarily so you can make more money, pay down that debt, and keep moving and keep growing. Okay? Hope that helps, Eric. Okay, next question. Jonathan asks, how do I determine what type of life insurance I should have? Business description and background of question. I am a residential real estate agent. I am looking to maximize my money for my future investments. I hear life insurance is a way, but I'm not sure what type will work best for me. Do you view life insurance as an investment vehicle, or how do you view it, and how do I know if it's appropriate for me? Okay, Jonathan, this actually question is very appropriate for me because in my early career I was a financial planner and provided, life insurance was a tool to incorporate in somebody's plan to make sure that they were protected. So there was a lot of people out there to talk about insurance as an investment, and people who said that it's not a good investment, and that debate will be ongoing forever. Okay, so but here's some ways to think about this. Most of the time, insurance should be looked at in the form of its protection for you. You're making smaller cost to protect against a large risk. Okay? If you don't have a large risk, you shouldn't probably have insurance. So you have to look at your own situation. What risk do you have outstanding right now in the form of life insurance? Do you have kids? Do you have a spouse? Okay? Do you have debts? And if you have a spouse and you have kids, and you want to make sure that there's some amount of protection for them, depending on what age you are, is another factor here. Okay, if you're in your 20s and 30s, then your earning power is going to be significant over time. And the insurance is cheaper. You may want to have a bigger policy to make sure that your family can transition if something happens to you. Okay, so usually that's the case when we're younger and it's more expensive. You should buy term insurance for covering this majority of this issue. Permanent insurance is a good thing. Okay, I'm in a situation now that I had permanent insurance when I was younger, but I let it go because the heyday of the 90s, and I had it in the 80s, and the heyday of the 90s and 2000s were of investing. I was putting my money to better use by having invested. At least I thought at the time. Interest rates continued to drop, but insurance companies, because of the type of investing they do in real estate and a lot of long-term applications, they paid out a higher return than you could have got in government bonds, on banks, and a lot of other areas. So it wasn't a negative to have money in insurance over time, especially in today's environment. That may be changing with interest rates increasing and other things happening, inflation and so forth, but it was good for a period of time. I wish I kept my permanent insurance. I think I had like a $50,000 policy, but then I also had a son and a wife, and early on, and I had term insurance to cover, to make sure that if something happened to me, that they would have probably not enough money to cover my income for the rest of their lives, or what it would have been if I was still living, but enough for them to transition. Okay, what can give them 3 to 5 years to go on and have the similar type of lifestyle that they would have now, and that your spouse can make a choice of being with somebody else, not based on a financial consideration. Okay, so that is kind of the way to look at this. And there's other factors involved, but insurance is also a tool that is good for planning purposes. You can put money in insurance, you can take out income tax free later on. So this money can accumulate, and then you get this tax-free return, which increases the return potential. And it's hard to calculate all that because you don't know what tax rates are going to be when you retire. You don't know when you want to start taking out money. You don't know the returns that you're going to have in the policy over time. So you have to make projections and assumptions there that will allow you to get some idea, but there are advantages of it. I would try to have, if you're younger, I would try to have a little bit of permanent insurance to know that you want to keep and have for the rest of your life. And because, like, I just remarried after a long time of not being married, and our financial situations are pretty significant. She doesn't have a lot of assets, and I have. I'm older, and so she older than her, and so I have more net worth. And with that, I'm providing a $1 million policy for her in case something was to happen to me. and so forth, based on other things that we come to agreement on. And buying term insurance at my age is quite a bit more expensive. And so I wish I had more permanent that I kept on onto, so I'd be in a situation where I did need some insurance, but I wouldn't be costing me as much. It's not outrageous, but it's still, to have $1 million policy is still a nice little check every month. So those are some things to think about. Happy to talk to you more about it. If you want to email me at greg@efficience.us. That's Greg at EFFICIENCE.us. And that goes for anybody else that I've answered questions for. If you give me more details, I'll go more in depth in my answers if I can. Okay, next question. Rosalie asked, how can I become more comfortable networking with wealthy individuals? Business description and background of question. I own a full-service accounting firm, and we help small business owners with all their accounting needs. As I am networking in the community, I have been invited to places that I feel like a fish out of water due to the financial status of the people that are attending. I would like to overcome the imposter syndrome and feel like I belong. Okay, Rosalie, very good question. Very common that we feel that when we're younger in our careers and trying to grow and trying to feel like we belong. And so there's some things you can do here. One is, a lot of this is within. It's within us, okay? It's in our minds, it's in our own assumptions and so on, and that we need to do a few things to help change our perspective. And that's just basically talking about how worthy we are and talking about our inner world creates our outer world, okay? And I read a book, Millionaire Mindset, and something like that, and it may not be the exact name. It was a really good book, and one of his points in it is that he said he put his hand over his heart and he said, my inner world creates my outer world. Points to his head, I have a millionaire mind. Okay? That is one way of creating an inner self-worth that is going to help you feel like you belong in those situations. Another more tangible aspect of this is to create as much knowledge as possible in your field. Okay, you don't have to know about everything. You don't have to be able to talk about everything. But you want to be able to talk about your field with utmost confidence that you know what's going on in today's world, tax changes and so forth. You said what? CPA, right? Accounting firm. So you know what's going on in the accounting world. You know what the latest tax law changes are. You know what is the right techniques to minimize taxes or to do the right accounting approach to people. You have that confidence. When you do, you can go in and talk to anybody and be in a world with a lot of successful people, be in a room or a place or a country club or a networking event or whatever it may be, and just know that you can talk. You can talk about life in general, but when it comes to talking about your particular craft, you have a confidence in you that is overwhelming, and it is people are going to feel like they're going to look at you like you belong because of your knowledge you have, and that you're going to be creating value. You could create value for them if they wanted to work with you, and you don't have to tell them that you can create value for them. You just got to talk about your world in a way that gives them confidence that you know what you're talking about. Okay. And a lot of people some people will use big words or things, and that's a way that when you hear people doing that, when I see people doing that, I say they're overcompensating, that they're trying to talk about their world in a way that makes them look bigger than they really are. So simplify what you do, boil it down to plain language, and just know that what you're talking, just in your sense of what you're demonstrating to them, is that what you're talking about, you have a lot of background and knowledge in, and show that to them. So there's also, hang on a second, let me grab this. There's a what is called reality statements out there. I printed one off from one of my coaches that I found, and I wanted to look at it to see, because I've used these over the years. And with that, you're trying to build your reality of what you want. So whatever you want to manifest, whatever you want to create in the world. And I'll read a line from it here. He said, I accept and receive unexpected good, unexpected money, unexpected love, unexpected kindness, unexpected generosity, unexpected offers, unexpected prosperity, coming in unexpected ways from unexpected places in my life and the life of others. Okay? And he goes on here, talks a little bit more about things, but just when you put something out like that, you're telling the world that one, you belong, one, that you're telling the world you're looking for these unexpected things that can come into your life, and be open to it to allow you to grow and to be better, which will build more confidence and make you feel like you belong. Okay? So there's a lot there that could be discussed. I mean, that's books and tapes and lots of stuff, lots of content. But check this out. I mean, check out some books out there. Look for some things that intrigue you relative to this. That Millionaire Mindset book could be a good one. There's other people. Peter Sage is who gave me that Oath of Manifestation. He talks about, he has programs and courses out there that are relative to building confidence, your inner, understanding the inner world creates your outer world and so forth. That could be helpful. Okay, and the last question here, Rosalie asked another one, and she says, how can I determine if buying leads is better than organic reach for prospects? Business description, background question. I own a full-service accounting firm, and we help small business owners with all their accounting needs. I am growing my firm, and currently I'm able to buy leads that are in need of my service and ready to buy. However, it is not guaranteed that they will go with our service. The other option is through organic reach, which will be very time consuming to build that relationship, and they may not need my services at the moment. Okay. Very appropriate question for the moment right now, because I just came back a few weeks ago, then late September there, with from Funnel Hacking Live conference. 5,000 people in Orlando attending on how to market your products online. Amazing speakers, amazing thing. Russell Brunson at ClickFunnels was the one who puts on the seminar, and he's there to sell his software, ClickFunnels, to help to market and get people, businesses, to do what you're trying to accomplish right here. So what I would suggest to you, given what I've learned, and I've done a lot of work in this area the past few years, and so I'm starting to really ramp up and get some experience with it. But what you want to do is to do both, okay? Because over time, your objective is to put out organic content, but at first you have to build your list. The more names you have, more email addresses you have, then the more opportunity that you own that, and you can go out and make money with that list. Every time you send out an email, a percentage of that should come back to you in the form of dollars. And there's calculations for that and so forth that is done in generalities. But I would look at Russell's book, .com Secrets. He's written 3 books, and .com Secrets would be the first to start to talk to you about how to sell online and sell this way, and talk about, do you buy the relationships, or do you do them organically like you're talking about? And he gives you a lot of knowledge in there to help you. So you got to look at a couple things though, like what you were saying. Okay, well, if I spend money on the leads, then you're either buying advertising to attract people to get their names. So there's a funnel to like get people's emails. There's a funnel to offer your product. There's a funnel to invite them to a webinar. There's a funnel to sell them your book, or to offer them your book for free, plus shipping type deal. So there's a lot of those approaches out there. And what you're wanting to do is you're wanting to make sure when you're spending money that your money is per click, or per name that you're getting, your cost per acquisition, okay, for each name, is you're making more money to pay for those costs. So there's the terminology that I won't get into because of it. I don't want to be confusing to people with the acronyms that are in the industry, and you'll see them all in the book. But basically what we're saying here is that what money you're bringing in needs to be more than what it's cost to getting those customers. And if you're not doing that, you're just going to drive yourself into the ground, because you're going to, at some point, you're going to be putting more money out there than you're getting back. I mean, at some point, you're not going to have any more money because you've been putting out more than you're getting back. So let's see what else. You want to build this list and you want to do it cost effectively, and that's going to be done by being able to make sure that you create the appropriate offers and so on. There's a lot of stuff I can get into here. Best to read this book. It's going to be a huge game changer for you to understand this world in the context that Russell explains it. And just the speakers that I saw and the different ways that you can set up and provide people to come to your business is fascinating. And it's going to be up to your particular niche and what you're doing to determine how you want to approach this. But I would definitely get the book and look at what your offerings can be. So the last thing I'll add for you is that a lot of times when you put something out there, the way to increase your return is to give them something maybe for free, but then there's an upsell once they say that they want to. Okay, so say you're offering them, you're trying to get names to do accounting work with them. So when they do, they give you your name, you're giving them something, but then you could say, hey, here's a report on the top 10 things you need to know for working with an accounting firm, and you may charge like $9.99 for that. And with that upsell, you're going to get, most people won't buy it, but the few that do are going to bring in more money than it costs for you to pay for the advertising in general. So your advertising is actually for free, which is a key aspect of what he talks about in the book of how you can grow your business. You can grow it exponentially because you can figure out ways to get more. You can bring in more money than what your leads are costing, even though you're not selling the exact thing that you're trying to sell. Okay, which is counting relationships here. But you can offer some other things that are going to be beneficial, that are cheaper and in the mindset people find value from. So whether it be a $99 piece of value or a $9.99 piece of value or $9.97, whatever those numbers may be or whatever the offering may be, it's going to allow income to come in. It's going to allow your cost per acquisition to be overcompensated by your revenue that you're bringing in. Okay? Hope that helps. And that is my questions for today. Good to be with everybody. Good luck with your companies and with your growth and with your lives. And we'll see you next month. Take care. Happy Halloween. Bye.